The biggest thing is get advice. Before you do anything else, get some advice. Go through the advice process, talk to the brokers, talk to the financial planners. There's so many experts on social media. Everybody's putting their hand up and I'll make you $1 million and I'm the best. It all seems to be about them, seeing the person selling or pushing the product.
Hi guys, it's Nick from the Lending Lab here. I'm here with a special guest today on the podcast, Julian from Prprty 360. How are you, Julian?
Very well, Nick. Thank you for having me.
That's okay. It's good to have you, mate. So, Julian, tell me a little bit about what got you into the property buying space and why you established Prprty 360.
Yeah, good. Thank you, Nick. That's a great question. My history and my background is that I worked within the investment divisions within the banks, doing the sales type of work, either assisting senior salespeople within in those banks.
Yeah.
So back then, there was a lot of focus on the banks selling managed funds and investment products. It's well documented these days about how that played out for customers, as we know.
Yes.
As we know.
Agreed.
So that's where it started. And during that period of time, it was all about selling returns and percentages of returns and things like that. And at the same time where we've got all these complicated products that we're selling for the bank that we're dressing up and making them sound like they're fantastic, they were delivering pretty much mediocre results. Yeah. And the house price in Sydney at that period of time was consistently outperforming even our best product that we had. And I worked in several different banks in that space. And then I was just like, well, I want to help people, particularly I want to help people make money because it's life-changing. And perhaps there's something about that in my own personal history growing up and the rest of it. However, I was very keen to do that. And that's how, over time, the business transformed into investment advice around houses and property investment.
Yeah, fantastic. And that's great. And your agency specialises in off-the-plan properties, which is great. But what are some of the advantages of buying a property new and building rather than established stock?
Yeah, so we have a strategy where we do off the plan. So like not all properties off the plan are winners, that's for sure. What we like to do is we have a philosophy or a set of fundamentals that we would look at before we recommend the project to our clients. Generally speaking, some of the key things that we're looking for is we like to focus on infill land subdivisions. So these infill land subdivisions already in an established market, so we have an established median house price. So if we can, in our search across the country, and when I say across the country, our market is predominantly the East Coast. So at the moment, we're as high as Cairns and we go as far south as Geelong, for example. We look for those infill opportunities where we can bring a brand new house to the market that sits underneath the median house price. Yes. And so therefore our clients, technically speaking, should be able to pick up that uplift. So we say to our clients, hey, there's a couple of advantages here. One, you have a brand new house which requires no maintenance. That takes a bit of pressure off your cash flow. There's generally a stamp duty saving as well. There are some tax benefits for doing that. And generally, you will see a higher rental income for that property. So if we can package all of that up together, there's a whole set of items that we want to make sure are in the client's favour, so turning the odds in their favour. We want to see a tight vacancy rate of below 3%. We want to understand the days on market for any product in that area. So we want anything below 90 days for us shows that there's a healthy sign, a healthy market where these properties are transacting. We want to know if the product that we're bringing to the market is suitable. So we would spend time researching who has the most for sale signs, properties in the area, the most dominant agency. And then we would then go and talk to these guys and say, right, why are these houses, what's the product in this area that sells? And why does it sell? So that will give us indications of it. It must be this, it must face this way. It must have a certain yard size. It must have these inclusions. And so putting all that together, we then put a case forward to our clients and say, hey, if you undertake this build and the challenges involved with that, on the other end of that, we believe you'll be rewarded. And our model typically is that we're looking to get our clients a 20% uplift in 12 to 24 months from the start. So that's basically from signing contract to house completion, and then within 12 months after that, almost guaranteed that we will have that 20% uplift.
Yeah, and that's fantastic. And clearly that is attributed to your research, because there's not too many people that are looking that far into these properties.
Yeah.
And I suppose that's your experience in that area. So all the years you've got with the different products and with the property is now resulting in those returns for your customers, which I think is fantastic.
Yeah. Most importantly is having a sharp broker that understands what we're doing, because in the markets that we operate in, they are fast-paced markets, and we want to be in fast-paced markets.
Yes. Yeah.
The last thing we want to do is be putting our clients into paddocks on the outskirts of capital cities, where there's, in some cities in Australia, there's literally hundreds of years worth of land supply on the outskirts. That's not our business model. We're not in that space. So our brokers that we work with, Nick, for example, we rely on their speed and their efficiency to make sure that our clients are able to negotiate best terms and also have a smooth, efficient process. Yeah.
Yeah, fantastic. And for someone that's looking to get into that and to, I suppose, work with your business, how do they come through to you? Is it by referral only from their trusted partner, or?
Look, yeah, absolutely. We didn't set out to be a business that was by referral only. However, that's where we're at the moment. The first thing that we would do if somebody came to us so we're not big on social media, we don't spend a lot of money in Facebook or any other type of lead generation campaign. A lot of what we do is word of mouth. So if somebody does come to us, and we do work with a lot of clients, referrals from clients and from advisors and the rest of it, our first sort of conversation with the client is, that's great, you want to buy some property? Awesome. First thing you need to do is you need to get some advice. You need to get some advice on how much you can borrow. You need to get some advice on what type of structure you should purchase in, and all those types of things. So we want our clients to be educated by the professionals in the industry before they come to us, because property investment can be great. There can be capital gains and equity on the table. However, it's an asset class that if you start and you get it wrong from the beginning, it can cost you literally hundreds of thousands of dollars down the track. So poor advice is counterproductive to what we do. So we want all of our clients to seek professional advice from their brokers or financial planners, or even both of those, before we get involved in the conversation.
Yeah, and that's fantastic, because with that advice and with that education, then they can make an informed decision and actually generate wealth for themselves, which is fantastic.
Yes.
So tell us about some success stories, customers that have gone through that process and have done really well.
Yeah, we've had some really good years since we got started. Now, to individually identify each individual, that would take forever. We don't have that much time. But in terms of our research and the locations that we've invested in over the last sort of, if we draw a line in the sand and say 2015, for example. In 2015, actually in 2013 and 14, we started looking at the Sunshine Coast. And we were actually probably 2 years too late. Not too late. We could have been in there 2 years earlier. But for all of our clients in the Sunshine Coast in 2015, we identified that there was an infrastructure pipeline of around $20 billion that was starting. That was huge amount of different things coming together. There was a hospital that was $1 billion. There was roads, so transport infrastructure, government infrastructure, private infrastructure. All of that was being undertaken. What we noticed was there's very limited mass developable land available from Maroochydore to Noosa. So that corridor there, so the Sunshine Coast goes south, through Caloundra and the rest of it back to northern Brisbane. And then there's the north, so Maroochydore and north, so to Noosa. That particular area there, we identified that there wasn't a great deal of land there. And that once that land ran out, that the property prices were more than likely going to increase significantly because the lifestyle was there. Lifestyle itself is not a research strategy. If you just looked at lifestyle properties, you could get your fingers burnt. So what we found is there was employment, significant employment, construction, education, lots of health employment, things like that. And at 2015, the Sunshine Coast did not have the same speed internet as other capital cities, but that was earmarked to be changed and addressed, and has since been addressed. And so once that was addressed, that was it. The employment opportunities there became significant. It became more and more popular. So to get back to the question, 2015, our clients were buying houses for about $500,000 in and around, not not in Noosa, but between Noosa and Maroochydore. Those clients were buying houses for about $500,000. A lot of those houses now are well and truly over $1 million, some as much as $1.5 million. That's one story. In 2018, we noticed there was some encouragement from the state government within Victoria to change and make some moves to opportunities to move employment out of the city. So it's sort of like to depopulate the city,
yes.
or at least take some pressure off. And so the state government in Victoria had a whole range of incentives for people to take up employment in the Geelong region. They also moved a lot of their public service work out into the Geelong region. There were some incentives on payroll tax and other things like that to move people into the Geelong region. Then they also made it easier to travel in and out of Melbourne to Geelong. So regional areas, Central Coast, for example,
yes.
travelling in and out of Sydney, improving that so not all stops, making them
yes.
limiting the amount of stops and moving people in and out of those areas faster. It was like an hour's a couple of hours turned into an hour. It's like, who doesn't really travel an hour in a capital city to get to work? It's very common.
Exactly right, yes.
They also started to encourage first home buyers in the area with double the first homeowners grant. So you could be on the outskirts of Melbourne in Werribee and build a house and only get the first homeowners grant. You could go 20, 30 minutes further to Geelong, which could be, you could have a great argument which is a better lifestyle, 30 minutes out of Melbourne in Werribee or in Geelong where the water is and the rest of it.
Yes, yeah.
And getting double the first homeowners grant. So we saw that and we thought, you know what, this is definitely interesting. So we carried out further research, partnered up with some of the local agents, and we advised our clients to purchase houses, again, around that $500,000 to $600,000 region mark, in and around the Bellarine Peninsula.
Okay. Yes.
So Ocean Grove, Torquay, Bells Beach. A lot of people have heard of Bells Beach.
Yes.
Yeah, Port Arlington, Clifton Springs and places like that. And, fast forward to today's date, and again, a lot of those houses are well and truly over $1 million, $1.2, $1.3 million. So, so the success stories are really based on our research and what we do differently. And just on that, like, for example, in Geelong, there was a huge land subdivision where they're building the second Geelong, which is called Armstrong Creek.
Right, okay.
Now, there's nothing wrong with Armstrong Creek. It's a great spot. But it's a 30-year master plan. So there's 30 years worth of land supply. And so what Prprty 360's research methodology and what we did differently is we took a look at that and we thought, well, hang on, Armstrong Creek is somewhat inland, the majority of it. It is more affordable, it is cheaper, but it's 30 years. It's a lot of construction to be undertaken over that 30-year period of time. A lot of supply. These guys that are in the business of carving up paddocks and selling land, they generally got a little bit more going on than the average investor, the mums and dads who we advise, and they've got lots of research and the rest of it. We thought, look, 30 years of bringing new houses to the market, there's probably a good chance that will hold down the value growth of properties. At the time, Ocean Grove, Torquay, Port Arlington, for example, were on the water. Those opportunities were on the water. They're great, beautiful spots. And we thought, well, for the price difference, which was negligible at the time, who wouldn't want to live by the water?
Yes.
Or who would want to live in a 30-year dust bowl, effectively? Has paid off massive dividends for our clients. Price differential now for being closer to the water than being inland is huge.
Yes.
So there's a lot of thought that goes into our advice. It's definitely advice and location first. So we want to pull things apart and say, right, well, what's our market? Well, our market really is the east coast of Australia. And then within the east coast, where are the pockets that we're going to invest? If you look at Australia and the rest of it, the majority of people live on the east coast.
Yes.
So there's still plenty of really good opportunities here on the east coast before we even get out of the east coast.
Yes.
Yeah, so those are the types of things that we look at. So in a long, drawn-out conversation, those are some of our success stories.
Yeah, and that's fantastic. And I think talking about that 30-year example, I think that's a really good one because you work very closely, like you mentioned earlier, with financial planners. And if someone only has 10 or 15 years to kind of make something happen, 30 years is too long. They're going to be retired and, it's not going to fit with the strategy. So when we are looking at strategies and we're looking at working with financial planners, can you explain to me exactly how that kind of happens in terms of strategy?
Yeah, cool. So for the record, we're not financial planners.
Correct.
Yep.
Yes.
So the space that we work in is not there, but I know that's not what you're asking. But what we've found is that there is an opportunity for our advice to be, I guess, go hand in hand with professional advisors. So whether that be mortgage brokers, accountants, or financial planners. It's simply a client has a requirement, generally speaking, when they come to a planner. That requirement, or call it a question, is, hey, we've got a handle on our mortgage. Right? Our kids are either living with us or not living with us anymore. How do we retire?
Yes.
How do we get there? And so that financial advice process by our partners and by the business in general is that they will bridge a gap backwards from, okay, well, Mr. and Mrs. Smith, how do you see retirement? How much money will you need in retirement? The conversation from there would be, okay, great. Well, in order to reach that goal, you're going to have to use some of perhaps your equity or your super or your surplus cash flow to invest in something. Mr. and Mrs. Smith, what would that be? Do you see yourselves more comfortable with shares, or do you see yourselves more comfortable with property?
Yeah.
Now, this is like a high level a breakdown of what it might look like.
Yes. Yes.
And a lot of customers would say, a lot of the time we hear the customers say, you know what, our super hasn't really done much in the same period our house has gone, gangbusters. And the whole thing about a super fund, and this is just a high level question. What I found is a lot of people sort of struggle with the transparency of a super fund, of a retail super fund or an industry super fund. They kind of say, yeah, they've given us a result each and every year. This is kind of what we're doing and this is kind of where we're at. But there's not a great deal of transparency. And a lot of the good advisors that we work with, they really shine a light on this and provide our clients with transparency and say, look, you know what, there's other ways to do this. Yeah. And potentially that might be a self-managed superannuation fund. And the thing about a self-managed superannuation fund, the control, the transparency, everything that has to do with the client's money is there right in front of them. It's really easy for them to see what's going on. Hey, we're going to take $300,000 or $400,000, 200 from you, Mr. Smith, and 200 from you, Mrs. Smith, and we're going to put that into a self-managed super fund. And they can see, well, there's $400,000. Here's my bank account with my BSB and the rest of it, and I can see my money.
Yes.
Fantastic. All right, cool. Now that you've got that money, we can use that as a deposit on an investment property. You can put that into some direct shares, so you can actually see, right, well, we're invested in all these shares. Some of the funds these days have caught up and they're more transparent, but being in this business for a while, there was not a great deal of transparency around that stuff. So the client's like, this is fantastic. And then when it comes to the property side of things, it's like, well, guys, you can go out there on your own now. There's a whole country out there you can go and buy some property.
Yes.
And if that's too overwhelming for you, that's cool. We've got some other people that you may be able to speak to. Have a chat to Julian from Prprty 360 or the team at Prprty 360. And they might be able to help you sort of do the same thing, like help you understand the ins and the outs of the property and what makes the property market move. Like, so, as you say, expert advice. The same as a mortgage broker. Same as a mortgage broker that goes, the client goes, well, I can go to CBA and they can give me 2 or 3 different products and 2 or 3 different rates. Or I can go to Nick, who literally has however many lenders and however many products. And we just help our clients through. So a lot to do is transparency and confidence, a lot about the advice process, which is fantastic. And people make decisions. What I've found is people are very comfortable making decisions when they have confidence, and confidence generally comes from this being able to see what's going on. And the more you sort of demystify and have that transparency for people, the easier it is for them to feel confident and make decisions. And then it's up to us to make sure that those decisions pay off.
And that's the good thing about how you operate and what you do. And with all of that expertise, for someone that's new coming into property investing, are there any tips that you could give them around getting started with property?
100%. I think the biggest thing is get advice.
Yes.
100%. Before you do anything else, get some advice. Go through the advice process, talk to the brokers, talk to the financial planners. I mean, we see it all the time.
Yes.
We see people, pick up a little bit of information here, pick up a little bit of information there, and then go and buy something. You know, they might buy it in a company structure without a trust. They could be employed, for example, without getting into the technical details of these types of things.
Yes. Yeah.
You know, and it's like, well, why'd you buy it in a company? Oh, because we wanted asset protection. Oh, okay. Just things like that, right? Without taking the whole conversation to breaking those. So we see that. Now, the thing about property is the selling costs and the transaction costs in property as an investment class significantly higher than trading in and out of shares and things like that. So if you did change any ownership on property, whether you're changing it from a company back to an individual or things like that, then any time that you touch that title deed, the government puts their hand out for stamp duty. So if you bought a house for $500,000 in a company and then you come to buy your next property in 2 or 3 years and it's gone up $250,000 or $300,000, and you get advice at this point in time because you need to buy another property, you find out, well, hey, guess what? You've got stamp duty liability now, not only on the 500, but now you've got it on $700,000 or $800,000. They're expensive. Property, you can make money in property, you know, for sure. But if you get it wrong, it can be a very expensive process to clean it up.
Expensive mistakes.
So advice first, always advice first. And the thing is, there's a lot of advice out there. You don't have to go too far these days in social media. I think everybody has a fair exposure to social media.
Yes. Yeah.
One thing I notice about social media is there's so many experts on social media. Everybody's putting their hand up and I'll make you $1 million and I'm the best and you should follow us. And it all seems to be about them, seeing the person selling or pushing the product. And that's fine, throwing mud in that process. But for us, it's more about the client's experience. We want to know what you want to achieve. You're the hero in our story. It's not us. We're not the hero. You're the hero. We want your money to work hard for you and we want you to get a good result. Yeah,
and that's fantastic. So with that as a key takeaway, get advice. Is there any other key takeaways or final bits of wisdom you'd like to give to the audience?
I think the property market as a whole at the moment is a great place to have. If you're investing, I think property is a great place to have your money at the moment. And there's a few things going on. The Treasury stats for how many people were coming into the country are vastly different to how many people actually came in. So, without quoting exact figures, but we're well and truly somewhere around 600,000 people in the country.
Yes, I read that.
The 1.5 million people on their way in the next 4 years.
Yes.
All right? We are severely undersupplied. We've got vacancy rates that are super tight across the country, perhaps the tightest it's ever been. There's the banks at the moment. The feedback I have is they're very cautious to any project that needs construction. I mean that not on a individual scale, but for the apartment builders and the developers. From what I can gather, there's not that much bank funding going around at the moment. So there's nothing to really address the supply side of things. Yeah. And so if you don't address the supply side of things in any sort of trade, you're in trouble. Because if you just pump demand into an area that you don't address supply, well then supply dries up, demand goes through the roof, and then the cost of whatever it is, and in this case it's property, it's going to go through the roof. I think if you're looking at investing now, it's hard to go past property. There seems to be significant pressure on rents. That in itself will eventually flow into capital values. So if you can get both rental growth and capital growth, you've done well. If you're talking about the money game and investing your money and getting a return, the property market offers quite a bit these days.
Yeah, fantastic. Well, look, that was great. So thank you for coming onto the podcast. I think our audience got a really good chunk of value out of that. And it was great chatting.
Excellent. Thanks, Nick. Appreciate it. Thanks for looking after our clients.
No worries.
Look forward to working with you some more in the future.